Hey guys, welcome to your very own YouTube channel Success Sequence where we daily analyze Nifty and Bank Nifty's important move and expected level for the next day. So in today's price action, if you could have observed that the market was trying to trade on a high side, but it did face resistance on a high side near the resistance or the level that we have suggested in our previous video. So you could see that the market could have ended on a high side, but it was not able to sustain, and this kind of wick which you are observing, it is suggesting that market was pushed down by the sellers. So there is a resistance on a high side. Now what you need to do is you need to observe the market from a crucial level point of view, and then analyze the market with specific range. So we'll start our analysis with the option activity range. 10,600 to 11,100 is the broad option activity range for the market. If you observe the call side, you will see that 10,850 to 11,100 has seen a fresh generation of bullish position. On the lower side, 10,600 to 10,800, these particular strike prices have seen call short covering. So again, a stable to bullish kind of move is what market participants are expecting. um, Again, on a put side, you will see a good amount of put writing, especially near the level of 10,800 and 10,700, suggesting that this particular level will act as a support for the market. And since the market is trading below 10,800 and above 10,700, we could consider that 10,800 should is also expected to get broken in an upcoming trading session. So 10,700 will act as a good sort of support for the market. And if you see previously, this particular level 10,780 was acting as a resistance, and since now the market is trading above this particular level will act as a support for the market. Now, if you analyze the technical indicators, you will see that the MACD, CCI, and RSI is already trading above its exponential moving average. Now, CCI is suggesting a bullish move because it has now come to a bullish zone. So, this kind of move suggests that the market participants now will expect a stable to bullish kind of market because the overall range has now broken. So, what you need to do is you need to watch out for the crucial levels that market can attain, and from that particular resistance can come. So as of now, we have seen that the market was today's high, you can see near 10,850. This particular level should be observed. If market closes above this particular level, next target could be 10,930. So overall, uh, now the outlook will remain a stable to bullish from this particular level till the time the CCI trades above 100 zone. So that is something which is suggesting that the market is now expected to trade with a stable to bullish kind of bias from now on. Okay, so that was my analysis for the Nifty. Now let us see what the Bank Nifty is suggesting. So let me open the Bank Nifty chart. So if you see, Bank Nifty is trading almost flat, and if you analyze the option activity range, it is very wide, almost 25,000 to 27,000 kind of range we are getting. So we'll analyze it, we'll narrow down it further, and we'll also observe the crucial level for the Bank Nifty. So as you guys can see, there is a bearish crossover prevailing in the market. Market did try to break above this particular level. However, the bearish crossover was still there. Also, you can see that the market also did try to go on a high side, but it was not able to trade at that particular level. Now the crucial part is market has taken support near its 8 days exponential moving average. So whenever the market takes support near 8 days exponential moving average, most probably the next day will be a gap up move or the gap up opening move. You would most likely you will observe. But since there is a bearish crossover and all the technical indicators are trading below its exponential moving average, that could be other scenario which we could not predict with a reasonable certainty. So let us take the help of the option data to come up with some sort of labels that we should watch out for. On a call side, you will see that the from 26,000 to 26,400 level, call short covering has happened. So that is suggesting a stable to bearish kind of move. On a 26,500 to 27,000 level, you can see a call writing. So call writing suggests a stable to bearish move, and call short covering suggests a stable to bullish move. Uh, and a call long covering suggests a bearish move. So basically, when you write a call option, you want market to stay below that particular strike prices from where you have done a call writing. When you cover a call long, you expect a market to trade in a stable to bearish kind of fashion, and when you cover your call short, you expect a market to trade on a downside. So these particular three position you can expect from the levels or the position from which market participants have been holding on to. Now if you see the put side, you can see a good amount of put writing, especially near the level of 25,600 to 26,700. Now in this particular level, you will see that the maximum change in open interest has happened near the level of 26,300, which is immediately below this particular spot price. So 26,300 is also happening to be 13 days exponential moving average. So from this particular analysis, what you can make out is that 13 days exponential moving average should act as a support for the market, and 26,300, which is also happening to be 13 days exponential moving average, if this particular level gets broken, then you can see 26 to 42 on chart. Now till the time market trades above 8 days exponential moving average, there will be a chances that the bearish crossover might get invalidated. But till the time you do not see a proper crossover in this particular zone, we should not create any fresh long position as per my analysis. And since the trading all other trading technical indicators are also trading below exponential moving average, suggesting there will be a resistance on a high side. So from purely trading point of view, I feel that there will be an up move, but resistance will again prevail and market will again come down. Most likely, I feel that if market continues to trade in this particular broad range, 26,242, which is a 21 days exponential moving average, can also seem to be tested. So that was the analysis for the Nifty and Bank Nifty. If you have liked my video, please hit the like button, subscribe to my channel, share it to your friends and family. If you want to learn the system that I have been using to generate buy and sell signals, please do check out the video description. You will find detailed playlist there. That's it for today's video, guys. I'll see you in the next video. Thank you.